Yeah. What's up, y'all? Happy Friday. Hope everybody had a great week. We are officially like 1 week away from the Christmas holiday. So I hope you guys are spending time with your loved ones and reflecting on the things that matters most to you. That's not material things, but the time and the experience with your loved ones. So man, I hope y'all had a great week. Real quick, go ahead. If you haven't already, grab you a cup of your favorite beverage and pour something up. We're gonna be here for a little while tonight. We got great content, great information coming. Uh, just real quick, I always have to make sure and check that the audio and everything is cool on YouTube. Since at one time it didn't go like I thought it was. Okay, yep, we're good. Yeah, man. So real quick, I always got to shout out to plug the sponsor, Ticker Apparel. Really quickly, Ticker Apparel, y'all see it scrolling at the bottom of the screen. You can visit the website. That's www.ticker apparel.com. And it is the first that I'm aware of, the first uh apparel brand that was birthed out of crypto. So if you go to the website right now, we got 4 premium t-shirts. With the purchase of any t-shirt, you will receive uh 10% of the gross sale back in the form of satoshis. Satoshis are fractal bitcoins, and so you need to have a uh active or open, active and open uh cash app account, and or not and or Coinbase, because you'll receive your satoshis via Coinbase or Cash App depending on what you specify at checkout. So man, yeah, please go over to tickerapparel.com and purchase a premium Ticker Apparel t-shirt. Really dope t-shirt. We got the sweatshirt. You guys can't see the logo, but it's like my favorite sweatshirt. Of course it is. Uh get some get a little bit of air over here. Uh so yeah, man. Let's go ahead and jump into this. Crypto has been struggling. The stock market has been struggling. Talked to you guys a little bit last week about what was going on. It's still taking place. Now, what's really, even though the NASDAQ has come down, what's kept the stock market afloat for the most part is really two companies. That's gonna that's gonna be Microsoft and Facebook, not Facebook, I'm sorry, uh Apple. Apple's down a little bit, and so is Microsoft, but they're not that far off their highs. That said, what's happening is the Fed has come out and they've declared they're going to end the tapering, meaning the money printing, meaning the Federal Reserve Bank has been purchasing assets. And at one point, they were purchasing stocks. So they were printing fake money and using it to artificially inflate and keep the stock market level as COVID first hit. And they committed to continue to do this really until 2023. Now inflation is getting out of hand, and they're saying, okay, we're not gonna be able to do it that long. We're gonna have to reel this thing back in a little bit faster than anticipated. So now investors are looking at the landscape from a tax perspective, because again, Joe Biden did promise that he's going to raise taxes. So people are concerned about that. If you got money in the market, you think you're going to get taxed more, you may go ahead and take some gains to avoid some taxes if taxes are raised next year. You got the interest rate hikes. So in the last Federal Reserve meeting, the Fed chair said that not only are they going to roll back the taper and the purchasing and the Federal Reserve purchasing assets faster, not only are they going to roll that back quicker, they're also going to roll back. They're going to start increasing interest rates. Well, obviously that's going to have an adverse impact on lending. So your mortgage will go up. Now it's going to cause the price of housing to go down. theoretically. So it's gonna be a kind of a net neutral effect. So if the price of a home goes down, but the interest rate goes up, then you still end up paying about the same for the house. So now you're paying more interest on the money, which is probably gonna keep your mortgage higher versus having a higher budget of what you could afford in terms of the dollar amount because the interest rate is lower. So it's an offsetting effect. So there's that. If you see a slowdown in housing and people purchasing and moving, then that's obviously going to have an effect on the economy. And kind of a not a big bombshell, but hold on. And then you got crypto. So what does that mean for crypto, and why is crypto tanking? And it's the same reason. So when risky assets or riskier assets, the stock market and the crypto market, as interest rates start going up, guys, then safer investments, like not necessarily money market accounts, but like fixed annuities, things like that, where people who have money, and the reason they're in the stock market is that they're getting great returns. But if they could take their money and put it in an investment vehicle that's going to yield a nice guaranteed return with less risk, then they'll take that, especially if they're like baby boomers and they need their money soon. So people will start fleeing the stock market and the crypto market because the dollar's going to start gaining strength as the interest rates get ratcheted up. So, there's two things that's happening here. Now, with all that being said, I do not think the bull run is over in the stock market. I don't think it's over in the crypto market just yet. Really, both of them, but they're coming to an end pretty soon. Again, that's just my prediction. So before I go any further, let me just lay this disclaimer out there. Everything that I do and say on this channel is for E&E. That's education and entertainment. It is not financial advice. If you are seeking financial advice, I would certainly advise you to seek a licensed professional. Make sure you do your diligence. Just because somebody that has a license doesn't mean they're operating in the highest integrity. So, with all that being said, this is for education and entertainment. Any information that you use herein to make a investment decision, you are using at your own risk. So please do your own research, do your own due diligence. Make sure you look into it yourself, guys. So uh, yeah, that's where I was. So I was talking about where. So we'll start with the stock market and where it's headed. So I believe the stock market is down roughly about 5% from the all-time highs. Now I'm talking about the NASDAQ specifically. The NASDAQ hit about 16,000. It's about 15,200 now. So it's about 5%. They have to drop about another 800 points for it to be a 10% drop, which would be an official pullback. You guys have to understand we haven't really had a pullback in this market since I don't know, July of last. It's been a while since we popped out of that COVID V-shaped recovery. We just haven't had it. And you know, what I would say is we're long overdue for one. And you've seen it in some of the stocks. If you guys go look at Fiverr, Wix, PayPal, um, wow, what's some others out there that have been just hit really hard, really quality stocks. I know Fiverr was a darling. It was on fire during COVID. Everybody starting business, everybody needed virtual assistants, things like that. And Fiverr was really jumping. I actually own some Upwork, and it's down. It was up with Fiverr. If you know, Upwork is kind of a competitor to Fiverr. Upwork has a more professional kind of vibe to it, where Fiverr just feels like you're dealing with more kind of side hustlers and gig economy people, which is fine. No knock to that. That's a beautiful thing. You're making money and you're doing great. There are people on Fiverr who make a full-time living. There's a video of a guy that I think he does like 1.5 million a year. And so shout out to all the people that's winning on Fiverr. But I say that to say Square. a lot of the high multiple tech stocks have been wrecked over the last 2 to 3 weeks. And from a chart standpoint, some of them still look bad. So, like, I like PayPal a lot. I think PayPal and Square are going to be the future of mainstream finance. But right, they had a heck of a run up, and my kids own Square in their portfolio, but it's gotten killed lately. They're still up because we got in so early, but it ain't been pretty to it ain't been pretty to watch fall. Like, Square went up as much as like 300. It got up to like $300+, and I think Square now is it's 150. I have to pull it up. Where is Square? It's getting killed though. Um, it has not. It's not been a pretty fall for Square, and of course, Square changed their name to Block to represent, the shift in strategy. So it's at $167.06. If I'm looking at that correctly, it got as high as 276. So it's down about 100 points. That's still a nice fall. If you bought past 200 or up in that area, you're definitely feeling some pain. We'll look at the chart on Square specifically in just a little bit. But yeah, so what's happening? These interest rates are going up. These high multiple stocks are getting hit. The tech stocks are getting hit hard. I think they'll find a bottom, but we haven't found it yet. Investors are still trying to assess what's taking place over the next year. So we got the taper, the Fed spending money like crazy ending. No more stimulus is on the table. Potentially higher taxes, gridlocked Congress, because I'm of the opinion that so next year's an election year. Next year is the midterm election. And so there's in my mind, a 95% chance that the Democrats are either going to lose the Senate or the House or both of them. And so, you just have a gridlock government. And so you're not going to have much happen there. Now, the caveat to that is if taxes aren't raised before the election, say before June or August, then Republicans will fight that because they're not trying to raise taxes. And then if they actually win, they're not going to vote that takes place anyway. So taxes could potentially, while it looks like a headline risk right now, taxes could potentially stay low for an extended period of time. So that's something you want to keep in mind on the upside, depending on the results of the election. Crypto, I know why a lot of you are here. Everybody's looking for a moonshot. Everybody's trying to come up big. I've been, studying as much as I can about the space. There's so much going on in crypto beyond just buying the coins. Once you get into staking, I'm learning about DAOs, decentralized autonomous organizations. That's a new buzzword. That's a new buzz thing that's happening. And we may look at it. We're gonna look at a video on that as well, where a guy put in, I think he said it was $17,000. These things have crazy APY terms of the interest that you're making. This guy found a DAO, a decentralized autonomous organization, Olympus, the Olympus DAO. He staked the native coin. This may be somewhat confusing, but I'm gonna do the setup and then we'll get into the video a little bit later. But anyway, this guy turned, and we'll get into the details. He turned $17,000 into $31,000 in roughly 2 months without doing any physical work, outside of just investing the money. So I thought that was wild. Something feels weird about it, but this whole space, man. Like in crypto, if you get a 30, 40, 50% gain, like it's stale. Like you didn't have any fun. People who get in at the right, especially you get in at the right time during a bear market, like 30, 40, 50 X's are what people have come to expect from the crypto market. And so that's why you see so many regular people becoming extremely wealthy, because the reality of it is if you can get through crypto bull markets, two crypto bear markets to bull market cycles. So if you got 10, 15, 20 grand available, which is a nice sum of cash, and you can invest that and you get a 50x. First of all, a 50x on 20 grand is $1,000,000. I'm gonna say that a 50x on 20 grand is $1,000,000. Some of these people are getting, thought I heard some people are getting like 100x's. So, you got to keep all of that stuff on. So yeah, just keep that in mind. Like, people are crushing it. I mean, absolutely crushing it in crypto. And so that's why people are in the space, because as it stands, I'm not sure there's an investment vehicle that's ever existed. And I've said this before. I'm not sure there's a investment vehicle that's ever existed that's allowed the average person to take what's considered a relatively modest amount of money and shout out to Linda Wood. I don't know, that might be a bot on there. They got a comment, but that thing looking real trollish. So I'm not gonna share that. But yeah, man, it's the one investment vehicle where everyday people are experiencing life-changing wealth within an 18-month period, from the beginning of the bear market to the end of the bear market, beginning of the bull market to the end of the bull market. Right now, based on everything that I looked at, I don't think that the bull market is over. A lot of the technical indicators still say that we're in a bull market, but with crypto, the tough thing about it, especially coming from the stock market side of things, is that the volatility of it is just like nothing you've ever seen. So pullbacks and like right now, you're looking, I told you guys about Square and some of these stocks that are falling. That's a big deal. In crypto, a 20, 30, 40% drop is not uncommon. But if you're coming from stocks, that's gonna rally you. You see a 30% drop in 2 or 3 days, that's gonna shake you. But it's just not uncommon in crypto. So coming into this space, you have to get comfortable with volatility. It's just the name of the game. Of course, we got the metaverse on the horizon. A lot of those tokens. There's some good channels out there to talk about it. We're in the early stages of the metaverse. So the Decentralands of the world, Sandbox, Axie Infinity, all of those coins. Um, again, this is just my opinion and view. I think that those coins could be, I mean, this is one channel. I can't remember. I want to shout the guy out, but I can't remember. But he's been in crypto for a while. And when I say a while, like everybody that's been in crypto for a while has really only been in like 2 or 3 years. Like the space is still, what I'm saying? So young people hadn't been in it an extremely long period of time, but they got some knowledge and some fundamental understanding of what's taking place. And this guy's pretty solid, from at least from what I've seen and on YouTube. But in any event, uh, he believes that not crypto, but the metaverse is really like where Bitcoin was in 2013. That's huge. That's huge. 2013. If you had Bitcoin in 2013 to now, and you put like 5-10 grand in there, man, look here. Independence for sure. So if we're there, you're gonna have to hold through some bear markets. But if you're believing in these are solid projects, of course, do your research. But the top metaverse projects are gonna be the ones that are gonna get people probably some, Bitcoin and ETH kind of returns. Especially and then some of these DAOs. We'll talk about them DAOs too, man. Like I said, them joints is crazy. Okay. So I've kind of given you guys the opening monologue. We'll go ahead and get into the charts. Let's pull that up again, man. Before we get into those, I said this without even, I didn't do this at the beginning. I should have. please, guys, go ahead and smash that like button for the YouTube algorithm. Go ahead, subscribe, and the notification bell in that order. Stay locked in with your boy. Great content on the way. All right, so let's talk about it. Where are we? Okay, so we're on YouTube. I wanted to go to the charts first, but where's my YouTube tab at? Okay. So we can go to Yahoo Finance. Oh, my eyes are getting dry, guys. Sorry about that. And my cold or cough that I had, all that I had going on last week, my sinus infection is cleared up, so I'm feeling a lot better. As I'm sure you can tell, crazy how they have those retargeting ads follow you or stalk you around like it's nobody's business. Chart. Let's go to the chart. Let's go to full screen chart. I want you guys to see the whole thing. All right. So this is a 5-year chart of. Let me make sure I got everything, you guys. Okay, that's I'm too big. Let me go down here to the bottom. There we go. We like this setup a little bit better. Well, I actually like. Does it matter? You see more? Did it make it? I like this better. Let's go with this. All right. So you guys can see as you look at your screen, and I get mine pulled back up. We're over here on the right side, and just to break down what you're looking at, there's 3 colored lines on this chart. There's a purple line, a red line, and a green line. The purple line is we're looking at a 5-year chart of the NASDAQ. The purple line is the 50-day moving average. The red line is the 100-day. The green line is the 200-day moving average. As you guys can see, when we bounced out of COVID, we've not touched the purple line. The NASDAQ has not bounced down to the purple line. That is as bullish as it can get. If you look down here, I don't know if you guys can see where my mouse is, but basically this kind of sub graph or smaller graph is a overbought, oversold indicator. At no point the NASDAQ has been overbought, but it's not been oversold. It's been oversold basically when this number, the smaller purple number down here where you see the negative 51, if it drops below 80. For the purposes of making this more simple, we won't focus on that as much, but I'll make reference to it so you guys can kind of keep up. Simple thing is what you guys need to know about the purple line. That's going to be the first point of resistance. If the NASDAQ, the blue line, the blue squiggly line breaks through the purple line, means falls below where the purple line is, which will be 14,355. The next stop is 12,300. Hold on. What's going on with my chart here? Let's get it right. Here we go. $12,311. And then below that, the 200-day is like 10,035. So right now, we can use the 14,355, which is right around 10% drop, as a good number to buy back in. Now, history would tell you over the last year, a 5% pullback has been enough because it never touched the purple line. But something has fundamentally changed with interest rates and the Fed projecting to raise interest rates quicker and faster than they previously expected, and also with the Fed ending the tapering. All this is a big deal. So I think we have a higher probability of dropping to the 14,355 than bouncing up right here and going to new all-time highs. That's my opinion. So let's get into crypto, and then we'll work our way to stock. So we'll look at Bitcoin, we'll look at ETH, and then we'll go from there. So right now, this is a 5-year chart. Yeah. Okay, here we go. So on the 5-year chart right now, you guys can see it over here at the top left. Bitcoin is currently trading at $46,487. The 50-day moving average for Bitcoin was 47,730.54. Now, what's interesting about Bitcoin is it doesn't have a market close. The crypto markets are 24/7. They're open 24 hours a day, 7 days a week. They do not close. Why is that significant? Well, the reason that's significant is compared to the stock market, like if this was a close, meaning it closed below the 50-day, then that's a very bearish sign. And then the next place we fall to, or the next official point of support is 29,671, which is another almost $20,000, about $17,000 drop from where it currently is. And that's more than a 50% drop from the highs. It got to 69,000. So imagine it goes from 69,000 to 29,000. So a $40,000 drop. This stuff is wild in crypto. But if you were in here, which I wasn't in Bitcoin, but I was in ETH, we already had a 50% drop. Again, as you guys can see, we bounced perfectly off of this purple line in the summer. Phenomenal time to buy. The charts are easy to understand and explain. As you guys see here, when we hit the line, boom, perfect bounce. We didn't quite come all the way down to the line right here on this dip. Still bullish sign, good time to. Now right here, it's broken through the line a little bit. What we want to see is over the next 24 hours, do we get a clean break? Do we get a clean break? If we get a clean break through this line, meaning we're well into Saturday and Sunday, and Bitcoin is at like 42,000, 40,000. If it drops here and it stays here for a moment, then there's a good possibility we go to 29,000. Hate to break that news, but I'm just telling you what the charts are showing me. So then that will make the 29,000 would be the support, and then 47,000 would be resistance. So we'd be bouncing between the red line and the purple line until it breaks out to the upside on the purple line. So if we get a clean break below the purple line through the weekend, then there's a real possibility that Bitcoin could basically drop to 30,000. And then that's going to be your best time to take a crack at it for what could line up as the next moonshot. Now, we'll tell you this. If we break through here and come down here, a lot of people are probably going to say we're in a bear market because as you can see, when we broke out in this bull market and we got above the 50-day moving average to this point in over a year, so we had the COVID drop. It bounced up above the 200-day moving average back in July. Really, back in May of last year was the best time to like get in. And it was what? $9,000? Believe it or not, I actually had some Bitcoin. I don't even want to get into that story. I feel so stupid. I had some Bitcoin. Bought some. I posted on Facebook. I was like, because I was skeptical of crypto and Bitcoin, and I said I need to see it go through some sort of calamity. I need a test, a real test for Bitcoin. COVID. I said Bitcoin and crypto. We had COVID. It happened. We got the test. It passed. I bought some, and then when we started to run up, because I got it about 9,000. It wasn't a whole Bitcoin. I had about $1,000 in there. We got to like, I don't know, 13,000 or something. I sold it. I was like, man, I made about 40% or whatever it is on my money. I just sold it. I had about $1,500. And I'm talking about as soon as I sold that thing, it started going crazy. I said, man, it went to the moon without me. I said, ain't that some shit? That wasn't no good. That was, yeah. So I didn't like that, obviously. Made some money. Nothing wrong with taking some profit, but dang, I was sick. I ain't gonna lie. So that's what's going on with Bitcoin. Let's check out ETH for all the ETH holders. If you got something you want me to look at, drop it in the comments for the next video. If you got something you want me to look at, please drop it in the comments for the next video. Let's check out ETH. Okay. Is this E? That's not E. That was hold on. Let me make sure I'm looking at the right chart. Okay, yeah. We got ETH. As you guys can see, ETH is still super bullish. Super bullish. That said, I've actually sold my ETH just because I didn't like how things were setting up, and I wanted to go ahead and take them profits off the table. Number one, I bought my ETH in the wrong place. So I didn't control my keys. I actually bought it on Robinhood, which if you're getting into crypto and you're serious about crypto, buying any crypto on Robinhood is a no-no. You just don't buy it on Robinhood. You don't control it. You don't really own it. Uh, you don't have access to the keys. So crypto enthusiasts, if you say, yeah, I got some crypto on Robinhood, they're gonna look at you like, really? Robinhood? You don't really have crypto. So took the opportunity because I was expecting some weakness, and because this $2,700 figure, that's scary. If it drops that low, I'm obviously buying back in because that puts me close to the cost basis that I was already in. But in any event, you guys, same thing with ETH. ETH bounced off the COVID lows and run up, had a pullback. It's never touched the purple 50-day moving average. The price of ETH is currently at $3,800, a little bit about close to $3,900, and the support level, the 50-day moving average, is at basically $2,721. So ETH could possibly, even though it did actually right here, it dropped to 1,800. But right now we're seeing that the support is at 2721, $2,700 and 2721, $2,721. If you're in ETH, you're gonna need some diamond hands. If you're in Bitcoin, you're gonna need some diamond hands. There's a real possibility that we're gonna see another 30-40% downside from here, just based on this market sentiment. So hold on to your seats. Hopefully, and I wanted to free up and get some dry powder because I don't think this bull run is over. Once investors are able to digest, I think we get kind of the fireworks ending, blaze of glory going out sometime in the first quarter, and you got to get the hell out of there after that because I don't trust anything. So I amend my statement from my last video. I think I said we were gonna go to the third quarter. Nah, my prediction is the first quarter. First quarter this year, we've seen the high for crypto and stocks. Stocks may not fall off a cliff. Crypto will likely fall off a cliff. Um, and so the easy money, for the most part, in the stock market and in the crypto market has been made. The easy money got made during the COVID bounce. Again, you want to buy at the most fearful moment. And peak COVID fear was March last year. If you'd have bought stocks then, if you'd have bought crypto then, especially crypto, you'd probably be a millionaire today. But the beautiful thing, especially about crypto, is that that train is going to leave and come back to the same station. So you'll have a chance to get on, but you have to be patient, keep some powder dry. If you can, the goal, I think, guys, you want to try to basically get your chips up, need about 10 grand. Just go ahead and throw it out there. Try to get you about 10 grand to the extent that you can over the next. So if crypto is going to top out and crash next year, the next Bitcoin halving, which normally signals the beginning of a new bull market, is in 2025. So you got about 3 years to try to stack up, get your hands on $10,000, however you can, not however, legally, however you can get your hands on 10 grand to participate in the next crypto bull market so you can also experience a life-changing opportunity. That's what I'm looking forward to. So, with that said, let's look at a few stocks. Look at PayPal. I started to buy puts. I bought puts on AMC and should have. I still like my AMC play. We're gonna talk about AMC in a little bit. AMC is going down, 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 down. But we'll talk about it more. So right now we're looking at PayPal. Man, I'm tripping. So right now we're looking at PayPal. I'm talking way too fast. I'm gonna listen to that on the playback. I know that thing sounded crazy. I know it sounds crazy. So you guys can see we had an amazing bounce, amazing V-shaped bounce right here. Let me see if we can draw. I tried this earlier. It didn't go that well. Draw. Hold on. Let me see if I can get a circle. There we go. Cool. So we got this circle right here. You guys see the V-shaped bounce back in May. We came here, we never touched the purple line, and then things started to break down in July. We hit an all-time high at 308. The stock price is currently at 186. So from 308, it still have to drop basically to the 200-day moving average. You guys see we blew through the 50-day moving average, fell down to the 200-day, blew through it. And so as you guys see here, the technical indicators are showing bearish with the exception of the short term. PayPal is in no man's land, and from what I can gather, we're going to 153. So this is a risk. I probably should have put on some puts there. I may do it Monday, but the next best place right now to buy PayPal is going to be $153. That's going to bring it back down to the 200-day moving average, which it hasn't gotten close to that since we had the COVID fall off. And I think that's going to be a perfect opportunity to buy. Perfect opportunity to buy. So I'm looking forward to that. If we hit this 153, and I'm saying like 3% above and below that, we may not hit this exact price. 3% above or below this, from what I gather, now your resistance. So then you'll have your support. Meaning, if we bounce off here, you could easily jump back up, in my view, to 210, which is a heck of a jump. That's like a 30% gain. It's about a 25 to about 33% jump from the 153 to 210. That'd be amazing. So I think it's a great opportunity to buy. Look for that. Look for that to happen to PayPal. If that happens to PayPal, 153 on PayPal, I'm picking up some call options, and I'm hoping them things go to the moon. Not hoping. I'm based on the risk assessment and the charts, we should be going to the moon, at least going back up to 210. All right, so that's PayPal. What else? Let's talk about AMC for a second. So AMC was up 19%. I think that was somewhat of a short squeeze. As you guys know, AMC was one of the meme stocks. And so it's AMC and GameStop. AMC is the movie theater company. Of course, nobody's really going to the movies. Guys, I've been to the movies twice since COVID hit. I went to go see Judas and the Black Messiah. Great movie, by the way. You should see it. And we took the kids to go see Space Jam with Go Jane. That's it. And you know what? I don't miss the movies. I was talking. I'm in a WhatsApp group talking to my guy, and we were just saying he was mentioning how really the only way he's going to the movies now is with that higher end experience where it's like truly a dinner in a movie. Like there's a server. I've not had this experience. I'm not going to the place. He told me he had the name of it in the chat. But basically, there's a movie theater chain whereby you can have dinner and a movie at the movie theater. Yeah, dinner. Man, my eyes are dry. Yeah, so it's dinner and a movie at the movie theater. Right now, the way things are set up for most movie theater is dinner and then the movie, or movie and then the dinner. But let me see here. I was trying to see if I can find it. Anyway, it's about $100. He told me it was about $100 for him and his family. But I was like, dang. But when you think about it, if you do dinner in a movie now, if you go to have dinner, family of four, at any casual dining restaurant, you're gonna spend $60. You go to the movies, you're gonna spend another 25, $30 on tickets. So it could be basically at $100. But the movie theater experience, there's not enough. The gap isn't wide enough for us to miss movies. Right, with streaming and everything showing up, they're releasing some of the movies on some of the streaming platforms for like a month. So, like, say for instance, you got movies and then you got like music. Like I've watched verses, I've watched some virtual concerts. If you've been to a concert before in your life, you can't. The experience is just different. Feeling the music in the arena, the sound and everything is different. You can actually get surround sound in your home. And if you got a nice enough TV, you can replicate close enough the movie theater experience. AMC has a ton of debt. Not only that, I wish I could. Let me if the the CEO and the CFO. Let me start with the CFO. The CFO has sold 100% of his shares. He owns no shares of AMC. The CEO, after several quarterly conference calls about having the opportunity to sell and not selling, and how he believed in the company. And then on the last call, he basically talked about how AMC was now 85% of his net worth, and it was a prudent thing for him to sell some of it, but it was going to happen through a third party. It wasn't him doing it himself, and he was going to stagger the sale and slowly, sell off some of his shares. Come to find out, this individual sold 90% in like a month. Sold 90% of his shares in a month. Now, remember they released a statement, talked about they were accepting Dogecoin. So now they're catering and playing to the Wall Street Bets group, hoping they keep the stock afloat while they can exit. So just like Wall Street Bets rug pulled Wall Street on AMC, the executives at AMC have now rug pulled Wall Street Bets, or at least whoever's left in the stock from Wall Street Bets. AMC, they'd have to completely convert their business model into this more higher end dinner and a movie kind of experience where you have a waiter and all that. But they got too much debt. And if the CFO selling 100% and the CEO selling 90% of the shares doesn't speak volumes, I don't know what does. Now, that said, let's look at the chart. You guys see these things, I call them buying events. So you can nibble at it a little bit. First of all, I bought some puts here. If it continues to go up, I'll probably buy a few more puts. But it's up 19% today. I think that's a short squeeze. But you see the charts played out perfectly. If you guys are looking at it, you'll be able to see that purple. I don't know if you guys can see my mouse on the screen. Let me try to draw another circle here. See if we can get that to go. Circle. Give me my circle. I got no circle. There we go. All right, cool. So you guys see right here, perfectly bounced off the line. I mean, textbook. Technical analysis made simple. That thing hit the 50-day moving average and hit a 20% bounce right off of it. Now, I don't think this is a buying opportunity, and I wouldn't have bought there either, just because fundamentally, you guys have to understand, this is not a company that was functioning well pre-COVID, and COVID has had more of an impact on their business than a lot of other businesses. So any business that requires you to be in a communal space with other people has had some effect. Now these folks were struggling even before the hand. Like this business was struggling. So let's look at this. At the end of 2019, let's go back 5 years. Let's get the chart right. Trying to look at end of 2019, December 30th, the stock price was $7.03. It's currently $29. So it's about 4 times what it was with less people going to the movies. A lot less revenue. Fundamentally, the business is in worse position. It's just not a company to own. And I'm confident. I bought some 2023 $7 puts. This is kind of a home run play for me. I went way out of the money. Because I think over the next 12 months, this stock is going to see its day of reckoning. And I think the Wall Street Bets Group, it would best serve them to get out and exit now, because this is a failing business. There were rumors out there that Amazon was going to buy it. Amazon is not going to buy it now when they could have bought it for $2 back at the end of sometime in 2020. Doesn't make sense. This thing got all the way down to $2. You think Amazon finna show up and buy it now for 10 times that? No way. Not happening. Yeah. So there's two things. I wanted to talk to you guys about the fundamentals of the business, that you guys know what insider trading is looking like. Terrible, abysmal. The people at the top do not believe at the company. But then I also wanted to show you the strength and the consistency of the charts. The charts, the 50-day moving average, like clockwork, they hit, boom, bounced, and there you go. So that's it for the charts. Again, if you guys have anything you want to see on the charts, we'll talk about that. Drop it in the comments, and we'll talk about them. I'll give it a look, and we'll talk about it on the next video. I want to get to this YouTube video, see if I can bring it up, and we'll talk a little bit about that. Look at the boy, big boy. There I go, right there live. Ain't nobody watching with me. Y'all come on, tap in. Stop playing. Let me see here. Ow. Olympus down. So Dow's are interesting. There's a lot of stuff. I would encourage you guys to watch this video on Whiteboard Crypto. This explains it really well. But I wanted to show you this first video about this guy and how much money he made in 2 months. I'm gonna have to probably rewind it a little bit. That's wild.
What's wrong with me?
Probably need to
What's wrong with me?
Put my mic on mute. Put my mic.
What's wrong with me?
What's wrong with me?
What's wrong with me?
Me.
With me.
A very strange day is coming to America. In short, a massive and surprising new transition could soon determine the next group of millionaires, while leaving 99% of the public even worse off than before.
2 months ago, I jumped into a crypto project called Olympus DAO. At the time, I'd never heard of Olympus DAO. So when I saw that they were paying out 8,000% annual interest, I thought that was absolutely insane and too good to be true. But after doing a lot of digging and a lot of researching, I actually came to the conclusion that the project wasn't too good to be true and that it actually seemed to work. So I decided to take a risk. I invested $5,000 and then just waited to see what would happen. And just 9 days later, with an initial investment of just $5,000, I ended up making $1,900, which I thought was crazy. And I got excited. I decided to double down and I added an additional $12,000 onto Olympus DAO, bringing my total initial investment up to $17,000. And over the next 1 week and 3 days, I made $3,362, even though the price of Olympus had actually dropped a little bit from when I had initially got in. And since then, it's been about a month and a half that I've had all this money sitting in Olympus DAO, accruing interest. And today I'm going to talk about how much I was able to make over that month and a half being on Olympus DAO, what's next for the future of the Olympus DAO platform, and why I decided to keep my
Crypto
funds
wild,
on
man.
Olympus versus moving them to some of the other copycat projects out there.
This is wild stuff.
First off, for those of you who don't know, Olympus DAO is the original DAO project. They're the ones who came up with this entire model for how to build a DAO where you have a treasury.
Smash that like button for the YouTube algorithm, man.
Their own liquidity. All of that concept came from this original Olympus DAO team. And all these other projects, which some of them are really, really awesome, are essentially just copies of Olympus DAO. They didn't originally come up with this model on their own. They are trying to, some of them put their own twist on it, but they weren't the genius minds behind the DAO model. All that credit goes to Olympus DAO. And as you can see, that team was able to create something pretty dang revolutionary in the DeFi space, where now we have, hundreds of other, DAO projects out there that are all trying to copy them, all trying to recapture that magic that Olympus DAO created. And although all these other projects can copy the source code of Olympus DAO, what they can't copy and they can't replicate is that amazing, revolutionary, genius team that came up with Olympus DAO in the first place. And over these past 2 months, that same team that originally came up with the entire DAO model has been really, really active, working to expand and further the mission of Olympus DAO. And one of the things that they've been really working on lately is something that they call Olympus Pro, which is basically bonds as a service. The DeFi model we currently use has some pretty major drawbacks, and they all really revolve around liquidity. Let's say you had a protocol and they had a token that they wanted available.
All right, let me unmute myself. I'm gonna pause it for a second. I know it's a lot to digest. There's a lot going on. You guys try to follow along. I probably should have did the tutorial. I'm gonna go back. My next one, I'm gonna do just DAOs alone. We're gonna learn what a DAO is, but I wanted to show you guys this video because it's just multiple. I wanted to show you guys there's other ways to make money in crypto other than just owning the coins. All right, let's let that keep running.
Available on Uniswap, or they want it available on SushiSwap or PancakeSwap. Well, they rely on third parties to provide that liquidity. You and I could go, we could get some of this token and we could provide liquidity on PancakeSwap so that other people can actually buy this token. The problem is there's a lot of misaligned goals between these two parties. The protocol wants their token to go up in value. They want it to be stable. They want the liquidity to be stable. The yield farmer just wants to get paid a lot of interest and wants the project to remain relatively stable. They actually don't want it to go up or down in value. They would be glad if the project never changed in price. And what will happen is a lot of these yield farmers might jump from project to project trying to get the highest yield. So the protocols to attract the best liquidity will provide incentives to the yield farmers to boost the amount of interest that they're getting paid. But when something bad happens, say there's a slight sell-off of the token, which causes impermanent loss for these liquidity miners, they'll freak out and they'll be like, oh, I don't want to be in this dumb project that's having all this, volatility. And they'll go and they'll sell off their liquidity. Well, with less liquidity, that causes the price to drop even faster. Users all rush for the door. Everyone starts freaking out.
I'm gonna kind of fast forward through some of this.
Liquidity, and it has this cascading effect.
I just wanted him to talk about how much he made.
Protocol's native tokens up over 20 to Olympus and reduces the amount of gas fees you're having to pay. When jumping, become impressed. 1,000,000%. You're looking at the point either percent, and then we did this other project. So I said, hey, this is the perfect time to take my risk off the table with original investment, essentially double in value, and just to be really careful. Anyways, my original goal with Olympus was just to wait till my original investment doubled in value.
Check this out now.
Off the table. And on November 22nd, that is exactly what I did. I had my original investment essentially double in value. I really wanted to jump into this other project. So I said, hey, this is the perfect time to take my risk off the table with Olympus. My original $17,000 investment had grown to, at that point, $31,242. So what I ended up doing.
Hold on. I got some effects.
Watch out, little bitch.
Hey, 17,000 to 31,000 in about a month and a half. So, just if we're gonna speak in theory, in a month and a half, I'm gonna round that up to 2 months. So his investment, roughly, it Stop just shy of doubling. So to make the numbers easy, we're gonna say it double. So let's just say he had $30,000 in 2 months. So there's 12 months in a year. 2 divided by 12 is 6. So it's gonna have an opportunity to double 6 times if it stays on this trajectory and this isn't a scam. So the quick math would tell you that the quick math would tell you that so if he went from 17 to 30, let's say it doubles from 30. So that's one time when we got to 30. Then you get to 60. That's twice. That's a double. You go from 60, you get a double off 60. That's 120. That's 3. You go from 120 times 2. That's 240. That's 4. You go 240 times 2. That's 480. 5. And then you're going to double again from 480, which will put you at like $960,000. So uh, if a huge if he'd have just let it ride and hadn't taken his original investment out of it, there's a potential that if that Dow and the APY, which was like 7,000%, I don't think you guys saw that he mentioned that, or I didn't let it run far enough, which was 7,000%. If he lets it run for a full year, he would have been able to turn $17,000. Again, this is a huge if. If all things stay equal and it continues to make money and return interest at the rate that it had been, he would have made $960,000 from a $17,000 investment in 12 months. That type of stuff. And this is, he had to stake the coin. And staking is, think of it like a CD. Like you have to give them the money and they lock it up. Now, the difference between staking on a lot of these cryptos is you can go get your money anytime you want, or you can go get the coins anytime you want, versus like a CD. If you put your money in a certificate of deposit at the bank, they want to hold it for like 3 years. And then if you try to get it, they're going to penalize you. They don't do that in crypto. And so think of it that way. Like he stakes the money, puts it over here, doesn't touch it. He did that for a month and a half, turned $17,000 into 31,000. He was like, he had put 5,000 in initially, and the $5,000 in like a week had made like $1,300. He saw that and was like, shit, man, I'm finna put some more chips on the table. So, yeah, you got to be careful with all this stuff. And we'll talk about that a little bit more. We're running close to an hour, so I appreciate y'all showing love, man. Go ahead, hit that like button, smash it for the YouTube algorithm. Go ahead, subscribe button, smash it for the YouTube algorithm, and the notification bell. I need y'all to smash all them joints, man. Smash all of them. And, man, I appreciate the love and support. But, yeah, there's a lot going on in crypto. So I'm really trying to lock in on this DAO space, learn about what's happening, because that seems to be between that and the metaverse, they seem to be the next play. You can figure out what DAOs to win in. You just staking coins. You put 10 grand, 17 grand in there. You're talking about dang near $1 million in 12 months. If that's a real thing, like literally $17,000, do nothing else, show back up a year from now and have $1 million. That don't even seem real in my mind. And it feels like most people will tell you off the rip that's a scam. But he just told you. He put his in. Now, this is a short period of time. He left the rest in there. We'll see what happens. I would hate, it would suck to not be involved, and he crushed it. He'd be like, dang, I remember I watched this video. Dude said he put the money in there, August of last year. And now here we are in August 2023, and this man got $800,000, and the money was just sitting over there. There's huge risk, man. You got to be careful with this stuff. It's so new. It's so early. There's no regulation. If somebody steal your coins, hit you up, if there's a hack, you just been had. So you gotta go in with that mentality too. Like you can't just look at it from the perspective of you finna get all this cheese. Just understand the risk. You know what I'm saying? Like, don't be scared to take the risk. Just understand it. Uh, I did stake some coins in the Time Wonderland. So there's another DAO out there called Time Wonderland where the APY is like 87,000%. It's like it's ridiculous. And so it shows you. Let me see if I can show y'all that DAO Wonderland. Maybe they'll let me change my let me see. Share. Okay, I'm gonna stop my screen share. I'm gonna share again. And I'm gonna go to Wonderland. It's up here. I don't see it though. I just wanted to show y'all Time. There it is. Let's see if we can get share. So I'm gonna see if it'll show you guys how this joint work. Nah, hold on. Dashboard. I'm already staked. Time. This action will edit tokens that are already listed in your wallet, which only approve if not cancel. So yeah, I got them. I opened me up a MetaMask, man. I transferred. I looked at the YouTube videos and everything to see how I do it. So I got some coins over it. This I ain't got that much. I got this little bit of time right here. But there was another. I wanted to show you guys. There's a calculator on here. It's connected to my wallet, I guess. Documentation. I'm already entering the app. Here's the calculator. So here's what I wanted to show y'all. It tells you. So if you put memo amount, if you put 2,000, this is the current APY, y'all. 81,000%. I know you're gonna be looking at this like, man, come on, man, that's trash. Ain't no way. 81,000%. But just real quick, and this is over 30 days. Am I doing this right? Yeah. So 81,000% APY. And if we stretch this out over 365 days, how big is this on y'all screen? Let me. Okay, I gotta blow this up. Y'all can't see it. I was just like, I don't think they can see. Okay, cool. Then y'all can see it a little bit better now. Hopefully you can. If not, please zoom in. If you can. I'm going back to Time Wonderland. All right, here we go. So from a $2,000 investment, staked at an APY of 81,900. If it's that for 30 days, 365 days, which it won't be. This, like, that just don't make no sense. How much money is that? I can't even, that's a comma. That's not hell, nah. There's no way. We're talking about, nah, that's not real. That can't be, nah. And so it tells you what your return is. It also tells you how many Lamborghinis you could buy. So from a $2,000 investment, or is this 2,000 times? It's a memo amount. I put 2,000. If I put max, what is it gonna say? Let me see. Yeah, so they're talking about the time token. So it's not $2,000. So this is the time token. This is if you buy this many tokens. So let's just say you got to do a fraction of that. So let's say half of that, 0.5 would be $1,500. So if you put $1,500 in that, left it in there for 300, well, it's roughly $16 since it's 3,200 per token. So this token, the name of the token is called Time. This is the current price of Time, $3,209. If you buy 50% of one time token, which is going to cost you about $1,600 at an APY of 81,000, almost 82,000%, the potential return is that's one comma another 1,000,000 1.3 million. I'm gonna say that again. Part of me just wants to be like, man, just stick 1600 over there and see what happens. Like if you lose it, you lose it. I don't want to lose it. But if you telling me I could put $1,600 in there and come back a year from now and potentially have over $1,000,000, like the risk reward is like $1,600. You really can't even get a you can't get your lady a Louis Vuitton bag for $1,600. Like I said, I got about 500 in there now, so I had to add another 1,000. Man, I might have to do it. I might have to do it. The more I'm thinking about it, you know what I'm saying? Because it's just like the risk reward is just saying, hey, I'm willing to lose the 16, but I know we're going into a bear market. So it's in theory what happens with this stuff also, guys. It works kind of the same way in the stock market in that sense. As this price here goes down, then this APY will go up. On the next video, we're going to focus solely on Dows because, again, if this is not a scam, which it just doesn't seem sustainable. So, something in my gut tells me, and man, it's not sustainable. If it's not a scam, it's not sustainable. Meaning it may not go away, but maybe the APY comes down to something that makes sense and a little bit more reasonable. Now, remember the guy that just talking had one that had an APY of 8,000, 7,000. This has an APY of 10x that. So imagine had he put his money here 2 months ago and that thing shot up. Now I think he did put some money over here and he has made a little bit of money. But imagine had he put the money here and what it would be. So it's saying $1,600 investment, 365 days at an APY of basically 82,000 would be 1.3 million, and I'd be able to buy 5 Lambos if I wanted to. Man, I'm about to talk myself into it just to see. But that's what it is. I'm not gonna talk y'all head off. I think I'm gonna leave that on a high note. That should have y'all thinking, wanting to learn more. And so you want to make sure you stay tuned. Come back to the next episode of FNL to make sure you guys are locked in, learning about what a Dow is and how it could possibly make you a millionaire from a $1,000 or $1,600 investment. So, man, until the next video, y'all take care, be safe, love and blessings, man. Enjoy your weekend. I'm out.